The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. Dow's up 100 at 25,819. 877-927-6648 is the number to call. Love to hear from you. There's so many things I want to go through. I want to step back a moment just to show you that this weekly chart has taken out the Dow. This is the middle one. So the left side is the daily, in the middle is the weekly, on the right is the monthly. And look at this key support level, a trend line that goes from the 21,712 December 2018 low, rallies strongly to 26,695 peak C, then pulls back very sharply. And that becomes, on the June 3rd low, becomes at 24,701, becomes a really strong support level. At that particular point, it rallies and it bumps into this up channel, Chapman Wave inside track up channel resistance. But I've been talking for some time about the possibility that there's a pattern that I call the double hump camel pattern. You know, there are camels that have two humps. They're rare, but they're round. And that's the pattern. It's like an M-shaped pattern. You see it here in the daily and then it fails. You see it here in the weekly, and we've gone underneath support so that it's intra-week. It's not even a day and a half of trading in the new week, so we can't talk about it as if it was Friday at 4 o'clock. But you can see already that the MACD has crossed negative with the green faster moving average going under the slow red one. Stochastic's now actually at 81%. It was up at 95%. And I'd say there's a chance that we have only two peaks in this particular weekly chart, and then we have a significant pullback. And the big thing will be, how does it hold trend line support? Does it come all the way back to the June 3rd low? What happens this particular week is going to be so important. 3 weeks ago, I said that was one of the most important weeks we've had in a very long time. You can see why. That's where we were getting, I think now it's about 4 weeks, I think, because we got that sell signal. The Dow had made a high of 27,398. Fortunately for subscribers, we were able to short it right at 27,391. The equivalent, we went two times short. This morning we've taken a half a position off. We took a tiny little bit off this morning because I don't believe that this rally is going to last before we do some retesting. But we still got a core, and we do not have that Dow long position anymore. We have to reestablish one. Why is this important? Because if this two-peak weekly chart arch formation going slightly above the previous high of 26,907, and then failing, I'm looking at this and I'm thinking, if the daily 9 and 14 period moving average closed negative, and sharply so, then surely at this particular point it makes the weekly 9 and 14 period moving averages really important. So I'm putting a lot of weight, a lot of stock, a lot of emphasis on what happens this week. It doesn't matter that we went negative yesterday underneath the dashed line. It's how we close the week. This 14 period moving average of weekly at 26,420, 600 points high. Hey, in this kind of market, maybe you can do 600 points as quickly as you've done 600 points down, and you can go up. But I don't know. You realize that just from yesterday's open in the Dow, let's go to the futures and I'll give it to you exactly. From yesterday's futures high of 26,460, over the evening, we went down to 25,778. I mean, that is really big. Just like that, bam. And now there's a very nice green candle, but that MACD is still very weak. Stochastic is turning around. It's going to have to do a lot of work for a very strong close above the 200-period moving average daily on the YM. That's the futures, and that would be at, I'll give it to you right now, around about 25,880. All right, enough with that. So I am looking at this, and I'm looking at it saying that in the overall spectrum, and I have to thank, where do we go here? I have to thank, am I going to be able to find it right now that I've said it? Yes. Gone. All right, I'll find it in a minute. It's here. It's here. There were, I was sent a monthly chart using a quarterly basis. There it is. I'm getting it. There it is. Oh, that's on the SPY. So Greg sent me a SPY. Oh, I'll have to do that because I did it on the Dow. Notated quarterly chart. If you're interested, I believe I have the count correct. Looks like an instant restart. It tells me where it begins for A, and then B, and then C, and then D, and then an instant restart A, B, C, and this could be going to D. So D leg current just for you. EURUSD, Greg. Hey, Greg, thank you very much. EURUSD as well. Thank you. So I'll have a look at the SPY in a moment, and we'll talk about it in terms of, put it right now. SPY went to the 200-period moving average, made a low of 281 after hitting 302 just about 7 sessions ago. 1, 2, 3, 4, 5, 6, 7 sessions ago. And this is a peak E in the weekly chart. Now let's look at the monthly. So Greg is looking at on a quarterly basis. Yeah, so if you go to a quarterly basis from the low that was made, that was in February of 2016, 181.02, January of 16. So that's 181.02. This is all leg A, B. No, that's not. That's all. Wait a minute. A, B, C. Oh, Greg, I'm going to have to do this myself. I just want to see. That's 1 month. So that's 1 month. So the high here is 219.60, 219.22, 216.70, 221. So that isn't a quarterly. That's less than 3 months. So all of this has to be an A, and even that peak C for one month. So that is really A. That's B. Greg, I think I'm looking at a C, peak C. So the next one, oh yeah, that's right. That's correct. Peak C at 928.18. 928.18. Oh, wait a minute. All right, I'm not going to rush into this. I've got July as peak C. All right, I'll do this in the break. I'm not going to do it now live. I'll do it in the break just because I do not get quarterly charts in TradeStation. I wish they would do that. It would be fun. But I'm going to look at your chart in greater detail. Thank you very much. So let's go on. We're looking at the Dow monthly chart is going to be very important because there's a chance that if there's no new high bar in the whole of August, if it doesn't go above 27,398, we've made a peak C. This high so far for the month of August at 27,171 is just 200 points off, so it's very mild so far. If there was a turnaround intra-month, then all of a sudden by the very last few days of August, going into September, there's a whopper of a move and it goes into a new high. That's going to be a very quick 1 month consolidation. So this is going to be very important because the MACD is still not positive. The stochastics at 82%, it is good. We've got the music coming on. I'll be right back. There's a bunch of questions I have about McDonald's and other charts. I'll be right back. Basil Chapman.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, folks, we're back. Yes, Greg, I did it. I agree with you. It's exactly right. We're in D right now on the SPY. This is going to be quite an important thing because at D, other things can happen. It means that either we recycle, we have a real sharp pullback using time and price, and then start a brand new ABCD. But there is an alternate count that I would have, and I would have this as an alternate count right now, D/A. And that would coincide with what I've got in the, this is what it coincides with what I've got in the monthly. I'm calling this A for now. So far, I have no reason why not to call it A. So now let me do a couple of things. I want to just show you that the dollar has held pretty well. This is kind of what I expected. This is a peak E, and when the MACD is about to cross negative, stochastic's gone all the way down to 61%. Price went twice now underneath the 14-period moving average. Technically, I should put a down arrow in. I'm waiting until the end of the day to do that. And the monthly chart might be an alternate count F. It has more the character of a B right now. There's nothing to do. I still like the dollar, but it is leg D in the monthly chart in a rectangle from a rising channel formation. It got repelled at the repellent line. So I've got to watch this closely. And the fact that gold has held so well and very broken out, to me, is really important. I've got a leg D in the monthly. I've got a, let me just say, I've got a D. Let me do it very conservatively. I'm calling it a D/C in the monthly. Why is it a D? Because you made that peak C1, C2 back in 2018, did have your very sharp pullback as if the peak C2 was a D, and everything was met in technical terms in the Chapman wave for a sell signal to sell mode. It went from the 1440s down to the 1220s or something like that. Then it ran up strongly, and the technicals now look like they're fresh. This looks like a fresh start to the monthly. So my inclination here is to say, actually, to be more conservative, I'd say D, but everything about it has the characteristic of a C, and that's really bullish for gold looking out. Even if there is a pullback, it says that you should probably get a new high. So, and the week and the daily chart, I could have an alternate count. I'm just calling it C for now because the MACD did cross over, but it is getting very close on the shorter term to some kind of sideways consolidation. That's all I'm saying right now because it's raised the base of support to the 1446 1453, 1446 level on the shorter term. So gold is acting very well. Silver, not as good, but still pretty nice. It's just stuck in that rectangle range. It's trading at 16.43. We'll see whether it's able to break out. The weekly chart should go to a D into the 1670s, 1680s. Let's see how that works out. Let's just go back now. I want to show you the dollar itself. On a shorter term basis, the dollar is holding nicely, but that 14-period moving average to the 15-period moving average, 97, about 97, let me get that exact, 97.79 to 97.86. That's your resistance area. You see the dollar trade at any point in the next week above yesterday's high of 98.14. That would be so impressive for the dollar. Remember, I think of the dollar as the Harley-Davidson icon internationally of currencies. I'm not talking about the Harley-Davidson as the company. I'm just talking about the Harley-Davidson icon all around the world. You can say Harley, and everybody knows exactly what you're talking about. It's Americans' big motorcycle that goes cross-country, pop, 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 just continues going. And that so far is the dollar, okay? So let's put it in that regard. But look at the euro. Euro has a very nice bounce yesterday. Can't quite follow through today, doji candle, but it is breaking out of resistance levels at 1.120. Very, very nice move from the low that was made just 4 days ago of 1.9, was it? 1.10. And this is trading with a high today of 1.124. And it's trading right now at 1.120. Hey, this is nice action. And the weekly chart finally is getting a little bit of respect. But look at the USD JPY. This is the currency pair. This is the yen. It's had the same thing, but to the downside. It is struggling now to form a base of support, so that's going to be important. Peak D in the daily. Why do I say peak D? Because in the Chapman wave methodology, we're always looking for the fourth highest peak. That's the modus operandi. You try to identify the lowest low bar. You're always looking at only three patterns, straight up, straight down, arch formation, cup formation, or a mixture of the three, and I should say the two. And you're looking for the fourth highest peak, even though you can go to E, F, and G in the Chapman wave up sequence. D, the fourth highest peak, is where other things can happen. Let's move this away, and I'll show you why it's important. Look at this. Peak D in the USD, in the yen. Daily peak D was made a long time ago in April in the weekly. And the arch formation in the monthly says that 200-period moving average at 105.79. We're at 106.37 right now. That better hold its support. Otherwise, it's a real problem. All right, look at crude oil. Let's just finish these up here. Crude oil is trading down 25 cents. Stuck. Remember yesterday I said stuck in the lower range. I thought I did that. I obviously didn't. I was about to draw in another rectangle formation. Say, here's your lower rectangle formation. Just stuck there. If it starts to trade at 15.30, it's broken key support. If it pops into the 56.30s, it says, back in the range. Okay, action. All right, IYT, let me just get these out of the way. This is the transport, it's called the iShares Transportation Average ETF. Trading at 181.61, up 1. Lousy action. 195.65 was the recent day of the 16th of July, but 209.44 was the September high. It plummets to the 155 level, and there's this triangle formation, this flag formation in the monthly chart. Takes out the 178 support, and it's going straight down to 172, the 200-period moving average. If that 175 low of May doesn't hold, it needs to rally, and it needs to rally very soon. So it's going to be a problem. Okay, XLU, the TLT, let's just get that out the way. Wonderful move, absolutely spectacular. 130 level to the 139. That is spectacular. Look at this, up 60 cents again today, 139.47. Wow, look at that monthly chart. I'd drawn it in yesterday. I didn't expect it to actually do it this quickly. I thought we'd have a little pullback first. Look at this. Going to the 143.62 July 2016 toward it. I don't think it's going to it just yet, but that would be an upside target of the iShares 20-year T-bond Treasury ETF. Whoa. That is a huge move. Okay, McDonald's, good idea to look at McDonald's. It's been a spectacular winner, and now it's trading at up 280 at 213.25. It's making a little H pattern. 218.96 was the all-time high in the 26. Pulls back to the 209 area. Nice bounce today. Peak D so far in the weekly chart. Only a leg D in the monthly. What do I think of it? I was asked. I think it's looking like in this particular environment, it's acting very well. It could be getting a little bit tired. So if you're in it and you're long, and you've been long for a long time, I don't want to make any changes. I would just say that I think we're about to start a very choppy period. Could go to the 222 level, and it could trade between the low 220s to the 204, 202 level over the coming month and a half, 2 months. So if that's all you're looking at after such a spectacular move, that's not a big deal. But I'll do a little bit more as we come back in. I'll tell you something that I might advise if you're a long-term holder and you don't really want to risk anything at this point. I'll be back. Guys, up soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by ThinkorSwim. For more information, just click the ThinkorSwim banner on the front page of TFNN.com.
Hi, folks. Just real quickly, I wanted to show you GBTC. I spoke about this yesterday. I had a question about it today. You see this little rectangle formation? Now I can make a larger rectangle formation and say, okay, I recognize this pattern. We've seen it so many times in a different way. When you have a spike to the upside, kind of make a flagpole, pull back. I usually draw the rectangle, and then I say there could be an arch formation going towards the high in a shorter time frame, making a very big a curve that rolls over. This is the opposite. So have a look at this. This is what I always advise people to do. Don't just look at one particular way of analysis. I love to do this. I haven't done it for a little while, but this seems appropriate. Here's the chart. What have I done? I've got this down as a lowercase h, making a lowercase m. I drew this arch formation, and it says there's a rising trend line here, and that trend line should come in just about there. And wait a minute, something's a little weird about this. Yeah, of course it's weird. It's upside down. Look, the MACD is cross negative, cross positive. The stochastic is is declining strongly. That's rallying strongly. So everything about this chart is very negative and says that if there is a takeout of the left side low, there's a good chance you could come to that trend line, and that trend line would be somewhere around there. But wait a minute, let's go to the real thing in real time and the right way. And lo and behold, what do we have? We have this chart that I've got to move out the way. We've got a trend line right here that says slightly descending trend line. And I usually take the body, not the wick, when it's a thick candle like that. And you're going, I prefer to be conservative. So this would be the lower trend line. This would be the more aggressive one. I'm using that wick high. So in here would be an upside target. You've got a MACD just crossing positive. You've got the stochastic, okay, it's 69%. If it was up at 80%, I would just be grabbing this and saying, wonderful, wonderful move. Now we've got ourselves a real bounce. This is a little different. This is saying it's still within the rectangle sideways move. So yes, I do like it. My thinking yesterday was that if it could come back, you remember I had the rectangle here yesterday on this. Did I have it over there? No, I had it over here yesterday, just thinking that this high would be the limit, and I'd like to see a pullback. No, I had it lower. I remember now. I had it lower, I had it over here, and I wanting to see a pullback just inside this rectangle, and then to make a decision for subscribers or maybe going long. Well, this is acting very nicely. It's holding well. Now the risk is a little bit deeper at 15.05. I don't know what stop you would want to put in, 45 cents or 50. But yes, it's holding better, and also because gold and TGBI, Bitcoin, that's what I'm doing. Grayscale, Bitcoin Trust, BTC trading at 15.05, up 45 cents, up 3.08%. This is in play, as I said before. But because it only trades during the market hours, it's really tough. I mean, what happens if overnight Bitcoin takes a dive? You're going to wake up in the morning and you can't even have a stop in because it'll just leapfrog over the stop to the downside. So that's the reason why. But what am I looking at? I'm looking over the next 3 days, 4 days, that if it doesn't take out if it doesn't take out the 14.18 low of yesterday, but in fact it's able to close just even one tick at 15.49, it's at 15.04 with a high today 15.26. There's a good chance it's going to go to that first level of resistance, which is up at the 16.09 level. So if that helps you, questions about that. Next thing I want you to do is, where did it go? Hong Kong. So I've got $HKDOW. That's how I get the dollar. It's exactly the same pattern, except that it's the Dow Jones Hong Kong Index. Made a peak D, double top. I'll give you the dates because my prices won't be your prices. At 604.97 on the 5th of July. It retested by fractionally for 2 days, going to 604.30, 604.39. Cannot get above the 604.97 level. Walks the 9-period moving average, then it treats it as resistant and then plummets. So this is, it's down 3 at 55.33. It's below the weekly 200-period moving average. I have to tell you, these weekly charts of many of these overseas indexes, not good. Great Britain, GBDOW. This is the FTSE 100 chart, but it's the Dow Jones UK Stock Index. It's fading miserably. Peak D in the daily chart on the 30th. Had a real single leg down. Even today, it's down sharply, down 2 at 320.44. 200-period moving average is at 317. Just 3 points away. So in other words, 3 points is 1%. It's 1% away from hitting the 200-period moving average. It's a tough market we're looking at. What am I missing? I did that. Did I do Germany? No. Dollar DEDOW. Germany right now is down 1.22 at 363. peak F on the 5th of July at 393.97, trading at 363, down 10%. And there's your dreaded H. This is the pattern I was showing you before. Let me get it again. I said, yeah, I'll get it. There it is. Remember the pattern I was showing you? I said a combination. So in red, why is it red? Because if you take out that left side low in the H pattern, lowercase h pattern, that could be really tough to the downside. Oops, I gave you the wrong one. That was not a good thing, was it now? Okay, this is the pattern we were looking at, and here's the real thing. There's your H pattern. It took out that left side decisively in the daily, but now the weekly. It's not a weekly close, but so far it's underneath the low of week of June the 7th at 365.05. It's trading at 363.44. Just barely down, but down. There's the lowercase h fading with the MACD week and stochastic week. Okay, next thing we want to look at is the IYR. IYR is trading right now. It's up 68 cents at 88.77. It's trading in a range. Now, we got taken out of our really wonderful PLD. We made some real nice money on that. That was Progenesis. PLD, it's probably also bouncing today. Yep, up 73 cents. And there was just one reason. I didn't want the left side low to be taken out to start a series of lower lows, because the weekly chart at peak E with a rollover perhaps unfolding says to me that maybe we're going to see something in the rates area, in the interest rate area, that's something a little different. And this REIT, industrial REIT, we got in at 75 all the way up to 80, 81, I think it was. We've been taking money off, and we got stopped out yesterday. So it's a very nice game, but I don't feel like having that risk right now. In fact, cash is going to be king just for the short period of time that we're looking at. So we're watching it. SMHs, for those of my subscribers who were short and stayed short, had a fabulous move from the 117.86 area down to yesterday's low of the 107s. I said it takes a little bit off at the open today, but raised the stop on the rest. So those people who did manage to get short better than I did technically for my newsletter, because we were stopped out by a couple of pennies. But if you were following it, you wouldn't have been able to get our price. You would have got a higher price. That's what kept you in with a very tight 2-point stop. So congratulations. I still think it's going to go lower. This is the one that this and the XLK are telling me there's more time. We're becoming very oversold. So we've used up some of that energy to the upside today, going all the way from 700 points down in the futures to 200-something points up. That's like 1,000 points down yesterday and 1,000 points up. It's amazing what we're doing. So I think we're starting to really get to a point where we start to flatten out. I'll talk about the VIX in a moment, because I think that's also very interesting and important to watch right here. Basil Chapman, Tiger Traditions Hour. Dow's up 86. I'll be right back after these important messages.
If you're in the CD market and looking for a secure investment, the TigerFirst Mortgage program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year, or $6,200 over the 4-year period. That same $50,000 investment in the TigerFirst Mortgage program would give you $3,500 per year, or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the TigerFirst Mortgage program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago, with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I was asked about EEM. The question is down 2.7%. I've got it up now. So yeah, well, yesterday it was down. What's it going to do right now? So all I can say is there's that H pattern again, and it went lower. So my thinking here is that it's just kind of stuck for a while. The big test is that 38 level on the EM, the iShares Emerging Market ETF trading at 39.42. Right here, that low that was made back in December at 39.24. Look, we're almost back there. That's already saying that it's not working out on a monthly basis, a weekly and a monthly basis. So just be careful, hold off. I think when you start to see the EM rally and start to make 2 weeks of successively higher peaks, let's look at it again. But at this particular point, it's just in that, it's a bizarre area because it breaks if it closes decisively under 37. That's just 2 points down. But it's really looking good if we can go 2 points higher, just in terms of holding. Not it has to really get to 44 to look like it's going to the all-time high. At this point, it's not even close. Okay, so the other question I had was where to go? Yes. So in the context, just could I have a quick look at the autos? So let's just go to Ford. Ford trading right now up, gapped up. It's up 23 cents at 9.45. Leg E, trough E being formed today. I'm watching this very closely because if these, regardless of what is said, if Ford is able to hit and it's at 9.46, if it's able to start to trade for 3 weeks, holding touching 10 and then holding the 970s for a couple of weeks, I'd have to consider that very good action. If it breaks down and goes back to the 8s, very bad action. Look at General Motors peaking in the daily, 41 round number high on the 26th. Wait a minute, a round number high. Wait a minute, it went higher than that, didn't it? Yeah, on the first it went to 41.90, and now it's pulling back. So 37s, it's the 38.74 down 27 cents. Must hold the 37s. Oh, it's a big problem. The weekly chart is holding okay, E/B. It's that weekly, the monthly that finally is testing the upside resistance. If at any point in the next 2 months, GM starts to trade at 42.80 or higher, on it closes on a weekly basis at 42.80, that's 4 points higher. That's about another 10, 11%. I'm just saying that's the level I'd be looking at it. That to me would be really positive. Goldman Sachs, yes, I forgot to look at, I'm sorry, Goldman Sachs, 224 high on the 26th, all-time high, 275 back in March of 2018, plunges to 151 in December, has a fabulous rally to, so that's 50, 60, 70 points up. That is huge. I mean, that's like a 38 to something, 42% gain. at 224.25 on the 26th of July, gives back, goes under the 200-period moving average. This is a problem. This pattern that I'm looking at here, having fulfilled the Chapman wave stalk leg formation, there's the leg, the body, the neck. There's the beak went underneath the low of the body and now starts a brand new move. This new move shouldn't have pulled back as much. It should have held the 211, 210 support, it's trading at 202. That's like more like a peak E in the weekly chart that is fairly serious. I'm looking at Goldman Sachs as a kind of a proxy for the next big move to the upside, and so far it's just in a big consolidation. The XLF, which is the S&P financials, yes, look at that peak F right there. What a big move down. Just in a couple of days, it goes from the 2880, was that? Let me just double check the exact high. 2872, and it goes from 2872 to yesterday's low of 2650-ish, and bounces towards the 200-period moving average is at 2675. Now it's kind of, yeah, this is a peak D in the weekly. We've got to watch this closely. You see that peak D in the weekly? Look at Amazon. Look at Amazon. What does it do? It makes that same kind of pattern, goes to peak D, pulls back, and then goes to a slightly higher high of 2035 under the all-time high. Remember the pattern we were looking at just a moment ago? I said there's this rectangle that can form an inside arch formation that in the shorter term can make a peak D, and then you start to see a pullback. There it is. So Amazon's really important, down 5 at 1759. I contend that Amazon is in a big digestive phase, still a fantastic stock, but it's in this digestive phase, and there's a chance that at 1759, the low that was made in March was the low of 1672, round number low. That would be a target for me in the short, within the next week and a half, Amazon. And that's telling me the market isn't quite ready to run. That's number one. And the other thing that you can consider is that there's going to be a rotation, and the rotation is going to tell us, does money start at some point to go into the small caps, the IWM, which is acting really poorly here? Or are we looking at some kind of a rotation that says, you know what, we can have these bounces, but basically we're looking at slightly lower highs and slightly lower lows from here on in for a little bit longer. That's kind of the scenario until there's just a sudden climactic turn. So I was asked, am I looking for the VIX to spike and the S&P to really plunge in a big move down like yesterday, but as a climactic move? And the answer is the VIX went to 2481 yesterday. It's at 2217 right now. That has been in play. We're going to have to wait all the way to Friday to see where it closes, because this is up in the high level. This is where you usually see triple-digit down days, not up days when it's up at this level. So the fact that it's down 2.40, down almost 10% on the day, gives the Dow a chance to rally, but it's not able to hold the rallies. Look at this. Look at the E-mini, the short-term E-mini. Look here. Go to this. Look at this. Remember I said arch formation, cup formation. Yeah, we got another arch formation. Finished with the cup. Now it's going back to the arch, just rotating, cup, arch, all the time until you get the sudden big spirals to the upside in a single line move. So this is, to me, very important. I had a question yesterday, and now I can't recall. Oh, would I go through my Dow Quartet and my cash index? Yes. Dow Quartet, Caterpillar. Oh, whoops, wrong thing. Caterpillar, wrong chart. Sorry, here we go. Caterpillar took over from General Electric. So that's in the mix, in the Dow Quartet. Acting really poorly. It's down 76 cents today. Had an all-time high back in, I don't know if I put this in, yeah, back in January of 2018, 173, plunges to 112, rallies up to about 146, and now it's trading at 120. Ugly, ugly formation. IBM, I don't know why I've got IBM. I don't think they're doing anything right. IBM trading down after a peak E spiral, rogue wave. It's at 139.60, down 1.14. Oh, it just looks stuck. Peak D in the weekly chart. Triple M, 3M company, multinational, peak E up at 100, about 187, trading now at 163. Terrible action. UTX, United Technology, merging with Raytheon. Ugly. Peak F at 138. down to 126 right now. Just this is a problem. So what about my cash index? Syntas, CTAS. Hey, it filled the gap a little bit, holding very nicely. SPY, we did the SPY just now. Oh, cash is Amazon. SPY is way down to 200-period moving average. Amazon, I think, is in a consolidation. And Home Depot, let's see where that is. Oh, my. 3 of the 4 are consolidating. I'll be right back. Basil Chapman does at 65.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So you can see even Home Depot is starting to give it up, and it's still holding very well if you look at the monthly and the weekly charts. This is really, I just don't think we're ready. Yeah, it's just too soon. It's too soon. It's like that ad. No, it's too soon. So the gap down in Tesla with an arch formation, lowercase h, like the dreaded H, says this is a real problem. We're going to be watching this closely. And everything I read about electric cars, I was just talking to someone this morning about how slow things are when you think it's so quick. When you get a new technology, I don't want to spend time on this. Other than every turn of the century, when you get new technology, it leapfrogs something else, and then it takes decades to actually become the norm. And when people were telling me 20 years ago, oh, electric cars, that you'll see nothing but electric cars. No, I said it's going to take to get the infrastructure to change so that you can just fill up in seconds, whatever it is, electric or whatever, or to find the different garages or service stations. No, it takes decades to do these things. So, yeah, you can see Tesla, a fantastic initiation of a concept, just brilliantly. Now's the mature stage. This is the stage where something else has to happen. Anyway, enough for that. I just wanted to say as far as the Dow is concerned, for subscribers, we do remain short, and we are looking for what I call an internal low. Might have been made yesterday, I'm not sure yet, but I'm still looking for some kind of a test of the low. I suspect the 25,200 area, that's going to be 25,000 to 25,200 in the Dow. That's going to be really important. Does it hold? Does it break? Does it even get there? That's what I'm watching. And for the S&P, 2810 to 2970s. That's kind of the area that says to me, go under that. There's much more time involved. Go under that and close higher on a weekly basis. That's good. This is going to be very important. Have a sharp rally. Should have had a Dow up after the terrible action over the last day and night. The Dow should be up, not 70, but 270 right now. Forcing people to be making decisions about, oh, I missed the entry point. Is this it? Nah, this is tough stuff right now. And I think it's going to continue tough for at least this week. And then maybe next week with options expiration coming in, we might have a zoom to the upside. Just lay back, have cash like we have, get ready for your buys. There are going to be plenty of wonderful buys coming up at some point soon. Hey, everybody, have a great day. I'll be back with Tom a little later on. Otherwise, see you tomorrow. Stay tuned for Steve, Dave, and Tom. Have a great day.